I think we'll get the meeting underway.
Progress.
All right, so I'd like to call to order the special meeting of council here on Monday, June 21st at 6 p.m. And due to COVID-19 restrictions, once again, we'll be airing this obviously on Zoom and streaming it on Saunders Facebook. If anybody does have any questions they would like as part of this meeting or the next one, please email pnopper@townofstanders.ca. And as well, if you wish to comment, you can also email him if you'd like to join the call. So we'll jump into recording of attendance. I note that all members of council are here except for Councillor Akaji. I think she'll probably be joining later. I'm not sure if she's having trouble getting on, but nonetheless, we do have 5 councillors plus mayor, so we're good there. Approval of agenda. I'll look for a motion to approve the agenda.
Your worship.
Seeing Councillor Heenan's hand, and then seconded by Councillor Neal. Is that correct?
Right.
Okay. Any changes, alterations to the agenda? Seeing none. All those in favor of approving the agenda, please signify by saying aye.
Aye.
And that is everybody. So that has been carried. At this point, we'll do disclosure of conflict of interest from any member of council. Seeing none. All right. Before we get into presentations, I'll just there is quite a few of us on this Zoom call, so I'll ask that if you aren't speaking, just to keep yourself on mute, just to make sure that there's no feedback. At this particular time, we'll pass the floor over to Caroline Davies, who is a member of the Passamaquoddy Board of Directors, and she'll be making a presentation on what we hope soon will be a new Passamaquoddy Lodge. So at this point, I'll pass the floor over to you, Caroline.
Well, thank you, Your Worship. And all right. It's not working, Paul.
You have to click. Yeah, your share screen is working. You have to just grab your presentation now.
Oh, shoot. I had it. I'd like to say welcome to all of you who've not already heard us present to council. I'm always impressed with the number of people who put their name forward in this community for various things, but I think being on council is probably one of the hardest. So thank you for doing that. Some of you have heard about what we're trying to do with for Passamaquoddy Lodge, so I just thought I'd bring the rest of you up to speed in terms of where we're at. What we are proposing is that we build a new home, but we build a new home that would encompass more than just the 60 beds with residents. Oh, great. So we have a facility that is maintained to the best of its ability, but it's nearly 50 years old. It was built in a time when people were still living independently. They moved into the Passamaquoddy Lodge, but they would often have their own cars. They could go to town, they could go out and about. They did not have the wheelchairs and other equipment that we now find people, as they age or live longer, seem to require. So I thought I'd give a few facts. The building was opened in, I believe, January of 1973. I have been told that the Passamaquoddy Lodge is the largest year-round employer. I know that there are other employers who during the summer months would have more staff, but we are year-round. 5.4 million annual spending, and 3 million of that is in payroll. A lot of that is spent in the town of St. Andrews. Some of the other items are there. I don't need to read through all of them. I think the more important thing is that we have 20 single rooms and 20 double rooms, and that the bathrooms are shared, which is a concern given what we've the last 15, 18 months that we've been living through the pandemic. We also have one shower and one tub for each 30 residents. Again, a cause for concern when you have viruses that can spread quickly. Our double rooms, if we were to convert them to single, are still smaller than the provincial standard for a nursing home single room. As well, the province is promoting that we provide additional support for aging in care and aging in place. And aging in place means supporting people who want to live in their own homes, live independently, but maybe maybe their caregivers need some respite care. Maybe they need access to a specialist, say, maybe they need access to an accessible hairdresser or things like that. So that's what we're trying to do. We also have structural concerns. We have congestion. We are very concerned about the safety of our residents and the safety of our staff. Accessibility, and I'll show you some pictures I believe you've seen, but the accessibility is also a problem and would be of concern, especially when somebody's reaching for something and they're sitting in a wheelchair. Storage is inadequate and hazardous. Some of you may remember that about 3 years ago, we did a major fundraising to put on a new solarium on one end and provide storage at the other wing so that we could reclaim our palliative care room. And the other thing with older buildings, Passamaquoddy is not alone, is infection control when you have an institutional model. These are just some pictures that we've taken to show how congested a large wheelchair or a regular wheelchair has trouble getting into the room. You can see where it's going to hit the door. If you were to visit in the morning and they had the laundry being delivered and the rooms being cleaned, you'd often see this type of congestion, which would not allow you to go visit whoever you're trying to visit. The picture on the right is the access to the garden, and it also serves as some of the storage for our kitchen. Again, you've got a congested double room, lack of privacy. And the picture of the bathroom, that curtain is now the door. To make the bathroom accessible, we had to take the door off. Again, there's a lack of dignity, a lack of respect, and a lack of privacy for our residents. And if any of you have had family or have family or friends of the family in Passamaquoddy Lodge, you've all seen this, but, and I've seen it, but it still blows my mind when I look at these pictures. What we're trying to do is to have a facility that would give us, and the tremendous team that we have at the lodge, effective infection control, allow them the facility to provide the person-centered care that they're trying to provide, and would also provide a safe home-like environment. The models for nursing homes are either institutional, the one on the left, or household, which is, it looks like going into a residential area, and which is where countries around the world are going in terms of providing care to our seniors. Our new home will have the household model. So the households would be houses of 12 bedrooms each. They would have private bedrooms and bathrooms, decentralized kitchen, dining, and living room area within the household. They would have access to a side yard and then access to a common area. There would be a community gathering space. We call it the hub. It could come up with another name. We'd focus on interior design, exterior design, and of course, landscaping to ensure that it blends in with its neighborhood. This is an example of the model of the household that we're looking at is called the Greenhouse Project. This is an example of their living room, which is centered around the hearth. And each household would have this same standard of living room where you could go and sit and feel like you were in your own home. We also want to have the houses surrounding a common area. They will not be 2 stories. This is just to give you an idea of how it could look. And for those of you who have deer problems, the deer would not be able to get in. So we could have a garden. Sorry, shouldn't have said that. I apologize. We've had an architectural firm do a concept for us. This is conceptual only. It is not a finished drawing. It has not been, we've not had any engineers look at land or location on the land, but it was to give us an idea of what size of land we would need to in order to build this facility. this piece of land, as you can see, is on the Bar Road at Champlain. The main access, the only access would be off Bar Road, where you'd have your administrative building, your main kitchen, your facilities maintenance or management, and then the 5 households would be in behind surrounding the common area. We are also proposing that we would have moved the Passamaquoddy daycare and integrate it with the nursing home. Research shows that intergenerational activities improves everybody's mental and physical well-being. It allows seniors to be more involved in life, and I don't know if some of you have heard some of the documentaries on the radio, but children also benefit greatly from the intergenerational exposure. So in looking at the greenhouse project, we have, one of the reasons we looked at that is they have tremendous research to back up what they're doing, their concept. There are a number, it's an American-based company. They have a number of colleges or universities in the States who work with them and do research on them, on how the small household works. In response to COVID, there have been a number of studies on how the household models were impacted by COVID versus an institutional nursing home. I won't bore you with data right now, but the difference was incredible in terms of the number of homes that reported COVID and the number of deaths, and lower on both scales. As I said, we're going to have a household model, the intergenerational programming, and that's not just with the daycare. We would also like to see more involvement. We have considerable involvement with the schools, but and with the community college, but increase that with other organizations. And we've been talking to Huntsman Marine Science Center as an example to see how we can do more programming with them, bringing it into, or bringing our residents to Huntsman. I had mentioned at the beginning, aging in place. That could be as simple as, well, it's not simple, but having a spa and bathtub that somebody who's living alone, but maybe is afraid to fall in their tub at home, they can come in and have a supervised bath or shower and go home. Maybe we'll have something like additional medical support. When we, as the age-friendly community, recommended that, I'll talk a bit about that, but the new medical center have a community kitchen, have a space for a number of other things that would support aging in place. Hats off to you guys that this new wellness center is fabulous, but it doesn't have the space to do that, to provide that on a regular basis. I'm continuously surprised at the number of people who don't know where Passamaquoddy Lodge is. So we want to see that the lodge and its staff and its residents are better integrated in the community. We will be building on best practices and technology. And I don't want to go into that, but that is an element. If at some point you want more information, we can talk to you about that. And we are looking at creating a template that the province can then share with other communities as to how to best meet the individual community needs across the province. I mentioned the Age-Friendly Community Initiative. That is really one of the drivers that pushed a lot of the thought process we've taken into what we proposed for Passamaquoddy Lodge. I just listed a couple of elements: social interaction opportunities, the community kitchen, fitness, accessible, dementia or Alzheimer pop-up cafes, respite care for caregivers, all those things we would be looking at. The other thing, we have been approached by a number of organizations as to what we're going to do with our current facility once we get the new one open. And people are looking at it, the developers are looking at it as affordable housing, which we all know is much needed in St. Andrews, and it's something we would like to move on. The other bullet that I did not put on here, but there is another driver that has us interested in moving now, and that is we've been approached about in terms of philanthropic donations. And these would be a sizable, we've been told that there is a fair amount of interest in giving sizable donations to the new home. So we're hoping to move sooner rather than later on that, so we don't lose out on that support, because it will make a real difference. Where we're at today, well, obviously we're briefing the new council. We have briefed our MLA. We will be briefing the Minister of Social Development, Bruce Fitch, tomorrow. We have met with a couple of people who could help influence political decisions on this, and we will meet with more. So our next steps, obtain government approval to move forward on this, obtain the land, get financing, because we will have to finance this. It will not be paid for by the province, and finalize the design. So that's where it's at. And if there are any points of clarification or questions, I know you might have 1 or 2 minutes.
Thank you very much, Caroline. I appreciate that. And certainly great to have you on with 4 new members of council. I do think that your last point was a very strong one. I think it's a common misconception that because it's healthcare, a lot of people assume that such a facility would be owned by the province, and that's actually not the case. It really is owned by the community, and obviously the board manages it as such. So I think that's an important note for all of council. At this time, I'll open the floor up to council if they have any questions, as I know that for, again, some members, it's their first opportunity to be on here and ask them. So I see Mr. Councillor Heenan's hand.
Hi, Caroline. Very nice presentation, by the way. It was very informative. Now, you mentioned there are 5 houses and would have 12 bedrooms in each house. Is that correct? So the capacity will be 60 residents in total?
At this point, we are staying with 60 bedrooms.
Yes.
The province is the one who dictates or does the analysis as to what bed requirement is in an area. We have heard that there would be a requirement for some memory care beds, which means that people are a little more independent. Whether the province wants us to increase the number of beds or stay at 60, we are hoping to hear tomorrow.
Okay, thank you very much. And one other quick note, is there a room for expansion should down the road they decide they need another house attached, like with 12 more? Is when you purchase the land, like I saw the design, which is great, but is there going to be a potential like to have another house added?
We're hoping with the household model that we, and as I say, this was a quick and dirty by the architects, so we haven't. Yes, the short answer, Lee, is yes. The long answer is we're going to have to reconfigure it maybe a little bit just to make it accessible to the commons, but yes.
Thank you very much, Caroline.
Any other questions from members of council? I see Councillor Hurdle's hand next.
Yeah, hi, thanks. I know that it's early days at this point, but I'm just wondering if you have a general timeline for completion of the project.
Oh, you're asking the wrong person. You're asking Miss Impatient. We had hoped to start moving this year. Obviously, COVID has slowed things down in terms of, and the government has been focused on keeping the province healthy. So we've been trying to not bug them too much. We've been told it'll take about 3 years from the time we get approval till we open the doors. So, our push is to get approval sooner rather than later.
Thank you.
And I know that they've just announced 2 Shannex's building 2, and they've talked about a 2-year window to build. So that's outside of my area expertise, but is something I would definitely talk to builders about.
Thank you very much.
I saw Councillor Blanchard's hand as well, I believe.
Yeah, thank you, Worship. Thank you for the presentation, Carolyn. It was an excellent presentation. Just wondering, I know, in the drawings there, you had identified that parcel of land by the Bar Road. Have you looked at other parcels of land within the town? Is that one, have you landed essentially on that, or are there other areas within the town that would suit the needs, or you sort of set on, is it just that one section?
There are a number, we've looked at a lot of different parcels of land within the town. We wanted to keep within the town. We didn't want to move outside town limits. Once we got the conceptual design, it's sort of eliminated a number of pieces of land. So we looked at two. The piece on Bar Road is probably ideal because it's square. We need a square lot of land. The other thing is that we bring all the traffic comes in off Bar Road and goes out on Bar Road versus coming into town. So delivery trucks, visitors, we trying to, not that we don't want people to come into town proper, but it does reduce some of that volume of traffic. And it also, I believe, better integrates the whole complex or campus within the town and within a residential area. This is a residence. This is not a hospital-like building. This is where you want to go and visit your grandmother because she's living in her home, and you feel like you're as equally at home in her home as she would be in your home. And so to have it integrated in a residential area is also important.
Anything else for you, Councillor Blanchard? You all set?
No, that's it. Thank you.
Sounds good. Yeah, I asked that question before, and some of the other sites that they looked at actually made them almost have to go to an institutional model versus that kind of almost campus feeling that the houses had. But a good question, obviously. Any other councillors? I see Councillor Akaji.
Thank
Deputy
you.
Mayor Akaji. I'll do that forever.
Thank you, Mayor. Thank you, Caroline, for another great presentation. I've been fortunate to be on the councils that have had the previous one and this one. I was listening to the radio, which I don't normally do when I'm driving, but they were talking about the shortage of staffing for the seniors housing. Are you worried about that as well? I know that we already have, like short staff sometimes at the Passamaquoddy Lodge, but at hospitals everywhere, like they are short on staffing. Are you with this ideal of the houses, I think I would think that it would be nicer to work in one of just the houses, but they're going to have to work in all the houses, right? And I just wonder how that's going to be done. Sorry.
So we believe that with the culture of working in a small household facility that we're proposing will be an attraction for staff and a retention tool for staff because it'll be hopefully state of the art. They will be, how it's going to work in terms of staffing is there will be staff dedicated to each household. So if I come in the morning, I don't go through the 5 households. I only go to the one household where I'm working, and I work with those same 12 residents and their families and my colleagues. Your nursing staff would come in and out because you don't have a nurse, for every household, and we wouldn't have it now. So that wouldn't change. So we believe that this concept will make people eager to come to St. Andrews and work here, and will help us, hopefully also help bring more nursing staff to New Brunswick if they see that this is the way the province is going.
Well, it sounds like a great idea, and I hope that it continues throughout the province, that they do more of these instead of the commercial ones. I like the housing idea. So thank you very much for the proposal.
Thank you.
It's Councillor Blanchard's hand.
Yeah, just one further question, Your Worship, and maybe to town staff, actually. I think I may know the answer to the question, but based on the description of the model, sort of this residential model, I'm just wondering, are there any zoning issues with regards to this being in a residential area, or is this considered, you know, with the combination of the care home and the early education or the daycare, does that still fall within the residential zoning for that area? Just curious.
I would think that we'd probably have to rezone it institutional would make the most sense. Is that correct, Mr. Spear?
If you don't mind.
Or Mr.
George,
Logan, yeah.
Yeah.
Sorry, I'm lurking in the background and I
I
just
see you
remembered
now.
you're on. So,
There's a lot of us today.
yeah. So that land, I believe it's currently in the serviced residential zone or estate residential, and it's actually I'm pretty sure it's in the residential growth area that we've identified in the municipal plan map, which basically says it needs to be rezoned to MR2 for any development. And MR2, the high density multi-residential, does also allow for long-term care homes or this type of residential facility. So it does need to be rezoned, but in some ways the municipal plan has already set up that process to happen. It still has to happen, but essentially that's what the land is for. And I mean, it could be, it doesn't have to be tailored to any particular population, but this would certainly work there.
That's a good point, because the follow-up to that is it in line with the municipal plan? Because I knew that was a high density area, but this would qualify as high density housing essentially, by the nature of it. That's good to know. That makes the process a little bit easier for us, should we go that route. Any other councillors? Okay, thank you very much for the presentation. Especially, I know you've made it a few times. Every time it gets better for what it's worth. And I know Councillor Gouachel and Councillor Akaji have seen it a couple of times, but you did change it up. And I will say, just in closing, that you know, the photos of seeing the rooms, to be honest, I think that hits home to all of us. You know, as we are an age-friendly community and people can, you know, naturally age, you want to know that you live in a community that has a resource like that should you ever need it. And some of those photos of those rooms right now, it's not where any of us would probably ideally like to see our loved ones. So to see that you and your board are trying to convince the province and of course even the municipality to partner to change the lives of aging people in our community, it is greatly appreciated by all of us. So good luck in your meeting tomorrow with the minister. And we'll talk as a council to find out next steps. Please let us know. I guess the next step would be to let us know how your meeting goes. But we certainly want to be kept in the loop as we look for the next stages of this project. So thank you again, and thanks for all the board members for being on here. We do have a presentation from our accountant who's on here next. So if you want to stick around, have some popcorn. By all means.
Love to, but
Otherwise, we'll give you a moment to jump off if that's what you desire before we jump to the next presentation.
thank you, everybody.
Okay, so we will switch gears now. We'll now have a presentation from Peter Logan, who is with Teed, Saunders, and Doyle, and they'll be presenting our 22 financial audit presentation. Just a reminder for council, you know, just due to the timing of the election and things like that, we haven't really done a deep dive on the financials yet. We will be doing a session on that as far as our priority session. So that'll be kind of our work session before to dive in. It doesn't mean that you can't ask questions that come out of this process. And I know that Mr. Knoppers just sent those out to you, so it should be in your inbox if you don't have them. But for the most part, what we're basically looking for is for the auditor to tell us that we essentially have clean statements and we're following the right accounting procedures, policies, and that. So at this point, he can explain it a lot better, but I'll pass it over to Mr. Logan. Thanks for joining us.
There, I'll unmute myself. Thank you, Mayor Henderson, and thank you for inviting me on this call this evening. And congratulations to the successful candidates, I guess, in the election we had about a month ago. And I do understand, I think there's 4 new councillors on council. So I'll give a brief outline, I guess, of what our role is as the auditors for the town of St. Andrews. So basically, we're required by the province to come in and audit the financial records of the town, which are maintained by Chris and Emily. And the town is required to follow what we call public sector accounting standards. So these are standards that every government follows, municipal, provincial, federal, across Canada. And so our job is to come in, we get the internal records, do our testing, do our auditing, do our procedures, and then we issue what we call our auditor's report. And so what I will do is I'm going to share my screen and we'll bring up these statements and you guys can let me know if you can see them okay. Can everybody see those?
You're good.
We can.
Yeah, great. So, so these are the cover letters. So what our report looks like is right here. So it is an independent auditor's report. And the word independent is important because it just means that our firm does not have any conflicts of interest with the town of St. Andrews. We're not related to any of the councillors or the mayor. So we do have we've maintained an independence. So this report, it's 2 pages long. It's at the beginning of the financials. So basically, the first paragraph or the second paragraph, I should say, is our opinion paragraph. And so that does state that we did find that the accounting records for the town of St. Andrews were in accordance with Canadian public sector accounting standards. So that means that we didn't find any issues that would put the town offside as far as the accounting standards go for municipalities. So that is a clean auditor's report. The first statement that I'll look at is here. So this is the what we call the consolidated statement of operations. So this is in the public sector, the public world, it would be your income statement for the year. And we use the word consolidated because we do include the Ross Memorial Library. It's fairly small compared to the town, but because the town has control of the library, we are required to consolidate those operations with the town's operations. So that's why we use the word consolidated at the top of that statement. So you can see here then the top section of the statement of operations is your revenue. There's your, so 2020 actual, 2019 actual, and then your budget for the year. So the largest revenue stream for the town is your property tax warrant. This year it came in at $4,144,000. So it was up around $178,000 from the year before. And as far as municipal statements go, these are all of these categories that we have for revenue and expenses are consistent with all municipalities. So we use the same terminology in the other municipalities that we look after. And then you've got services provided to other governments, revenue there. And what I'll do is I'm going to go out at the end of these statements. There's a note. And we'll just flash out to note 21. And it just provides a little bit more detail behind what we're seeing on that statement of operations. So you can see there your services provided to other governments, fire protection is the primary source there. Sales of services. So this would be things that the town runs, operates, and collects revenue on. And this year you'll notice under recreation, so that's things like ice time, sports fields, that sort of thing. And revenue is down this year. And COVID-19 has a lot to do with that. But there was a lot less activity, I guess, in 2020. Same with the wharf. You can see there that wharf revenue was down a bit, quite a bit, actually, substantially from the year before. Again, there wasn't any operations going on or very minimal as far as traffic in and out of the wharf. So that type of revenue, sale from owned services, you're at 177,000 this year. Conditional government transfers. So what this is this would be grants that the town receives for various projects. The main one there for this year is gas tax funding. So this year the town spent $110,000 on gas tax income that came in. And those projects would be capital. So whenever you're receiving conditional grants or capital grants, under public sector accounting, we recognize it as revenue. However, that money is spent on capital. And gas tax, it's like a 5-year program. And Chris, you can tell me what year you guys are in, but every year there's a project or you have to meet certain qualifications or eligibility requirements in order to spend the gas tax. Pretty much a lot of infrastructure, I think, pretty much qualifies for gas tax funding.
Yeah, it ends, Peter, in 2023.
So this current round is till 2023. Yeah.
Correct.
And this program's been going on for a number of years now. So all municipalities get this money. And then you've got some other provincial operating grants that came in as well for $53,150 there. And then last year there was a designated highway, so that would have been some money received for work done on streets and roads. For I think it was the provincially or designated highway. This year we didn't have that, so that's why this year the conditional grants are lower. And then other revenue from own sources, you can see this year that other revenue was up substantially at $1,134,000 from the previous year. And the large chunk of that would be donations. So the town was fortunate enough to get, I think it was a $700,000 donation from the Dunn Foundation towards the medical center. And there was also, I think, another $50,000 from the Dunn Foundation, which was received to go towards, I think it was a park, some upgrades in a park.
Peter,
And that's,
just before you jump too far, I just want to reiterate to council too that this is different than traditional accounting where capital grants are treated as revenue. So that kind of makes our statements look a little different than you would see in the private sector.
yeah, and we'll see that when we look at the back on that statement of operations. And Chris is right. So the $771,000 that you're getting in donations, that money is being spent on capital. So we do recognize it as revenue, but the capital, we actually amortize capital depending on what it is over a number of years. So that related expense to those, to that funds, that'll get amortized out over 20, 30 years. So there's sort of not a perfect matching there between the recognition of those capital grants and then the spending. So your other revenue there, you're at $1,134,000. So if we look back, I'll try not to give everybody car sick here with the flashback. So there's the $1,134,000. Your unconditional grant at $64,748. That's just a number that comes in from the province that the town can spend on operations. There was also $55,000 received in the year related to the COVID-19 expenditure. So the town would have had some additional costs this year. So the province is providing some relief, I guess, to towns. And in 2020, it was $55,000. And I believe, Chris, there's also a 2021 component too.
That's correct, $96,000.
So that'll be recognized this year. And then the other major part of your revenue would be your water and sewer fees. So those are, this year you were at $920,296. And there was a rate increase this year, which is reflective. You can see last year revenues were just under about 693,000. So the total revenue this year was $6,835,000. And then when we look at your expenses, so again, these are typical categories for all municipal operations. So general government services, that would be your town hall predominantly. Things like audit, insurance, legal would fall under there. Protective services would be police, RCMP, and fire. And then transportation would cover roads and streets. You've got environmental health, that would be garbage collection. Development would be sort of things in your community. Recreation and cultural, of course, would be parks, ice, time, arenas, and then your water and sewer. And similar to the revenue, if we just do a quick jump out to that note 19, there is a breakdown there of expenditures right here. So under your general government, you can see, so mayor and council, you were rate just $61,930. Budget was $62,250. And then on the administrative side, this would be the staff. Now, last year, there wasn't a manager, I guess, per se. Chris was acting. Is that right, Chris?
That's correct. So we kept everything in the treasurer's office. Yeah.
Yeah. So this year, now that we've got that, sort of that, Chris is now the town and manager. So total general government expenses this year were 990,000 versus $1,041,000 last year. And then under protective services, so your fire department costs were 328, up a little from the year before, but well within your budget. And then you'll notice under police, lower this year. And I believe there was one less officer in 2020. There was 3 in 2019 and 2 in 2020. Is that correct, Chris?
More or less, it's like 3/4 of an officer, but there's some adjustments that happen on an annual basis, and that's reflective of just a lower cost this year.
Right. And then you've got bylaw officer and then animal and pest control included in there as well. And then under transportation services, so here you can see the total there, you were at $1,099,000. And then, so last year you're at 1.397 million. And you'll notice last year, when we're recording, I mentioned it previously, amortization. So that's basically also known as depreciation on your capital assets. So part of that would be your streets and roads. And so last year, that number was higher. There was some roads, I guess, that would have, or large amortization, they would have come off the books last year and they weren't there this year. So when things get fully amortized, they're no longer depreciated. So we only add every year. And I'll show you a note that'll show a little more detail on the tangible, what we call tangible capital assets. We always like to look at snow and ice removal. So that was a nice year last year, 44,000. So under budget. So that was a nice mild winter. So environmental health services, you can see there that your regional landfill is the bulk of that at 159,000. And then environmental development services, included in there this year is there's a new item for the accommodation levy. So that's money that's collected. It's an in and an out. It comes in it comes in through the hotels. I think the Algonquin would probably be the predominant one, and then it's paid back out. Is that right, Chris?
Yeah.
Because there was an identical, so that 178, 188 expense that was paid out, or you would have received an equivalent amount of that.
Yeah, so basically the way the funding works is the money comes in and then it's repurposed or given to the marketing agency, Explore St. Andrews, early in the next year, but it's always recognized in the year that it's earned.
Yeah, and I think up here, in the revenue, you can see there's your revenue. That's the revenue aspect of it. Yeah, so it's a net zero, but it's an in and an out. And then recreation, so that cost there this year was 831,000. So it was down from previous COVID again. Would have an impact on that as it did on the income side of it. There's also a new age-friendly committee this year. That's a new item for 21,000. And then your water and sewer expenses are categorized here. So the water and sewer, you can see underwater, you were 235,000, down from last year, under budget this year. And then on the sewer side, you were at 128,000 versus 123 in a budget of 130. So pretty close there. And then you can see the amortization. So that would be recognizing the amortization expense on your water and sewer capital assets. So if we go back to the statement of operations, so we can see here then this year with total expenses of 5,290,000 on revenue of 6.8 million. There was a surplus this year of 1,544,000. And then we recognize within the town's reserve funds, there's investments. So every year at December 31st, we make an adjustment between the cost base of those investments and what the market value was at those investments. So there was an adjustment to the unrealized gain on those investments this year of just about 15,000. So when you look at this and you see a surplus there of 1,559,000, as Chris had mentioned, A lot of that is because under public sector accounting standards, we are required to record those capital grants either through donations or through government as income. So that money is actually, it gets reflected in your revenue up here. The actual expense though, the capital, it does not get picked up in the expenses other than in the amortization account. So there's a bit of a timing difference there between when we recognize the grants and when you're actually expensing those out. So that's why you see this year, same with last year. Last year there was a $766,000 surplus. And this year you're at 1.559. And what you guys will, I'm sure when you have your, I guess the financial statement session, you'll talk about the funding, I guess the funding basis of accounting versus the public sector basis of accounting. So the funding basis of accounting is kind of what you use to establish your property tax warrant, your user rates on sewer and water supply. And so that type of accounting takes into effect that it's more of a cash based. So in that situation, you're going to count things like a debt repayment as an expense. And you're going to count things like buying capital assets as an expense. So we've got a note 17, that talks about this reconciliation of annual surplus. And you can see along the top there are these different funds. And so within the town's records, you have a general operating fund, which is sort of the day-to-day stuff. The property tax warrants come in, and then you use monies in this fund to pay down your operating costs, your wages, also to pay down debt on your borrowings. You also use it to buy capital assets. So for example, this year there was $972,000 worth of capital assets purchased from your general operating fund. So what this shows at the bottom on a funding basis, in your general operating fund, your surplus was $35,806. And so that would be basically the money that you took in during the year, primarily on your property tax assessments, but also on your operations, minus out what you paid out in expenses as well as long-term debt repayment and purchasing of capital assets. So there's a bit of a different accounting treatment for these items between the funding method and the public sector accounting, which is what we have to report these statements on. It's a bit confusing, but I think when you kind of go through, for the new members, when you go through the financial statement review, Chris will be able to explain a little bit better or a little more detail, I guess, on how that works. The province still wants us to track it this way. So you can see, like in your utility operating fund, there was a surplus this year of $215,000. So those are your operating funds. And then your general capital fund, that just is the capital assets are in there. And then your reserve funds are here. So you've got, and I'll show you, we've got that as well. So the reserve funds are a separate fund. That's basically where the town can accumulate. It's almost like a savings account. You can accumulate funds in there for specific purposes in the future. So it's often quite common if you're getting near the end of the year and you've got a surplus in your general operating fund, then you may make a decision to transfer some money from your operating fund over to the reserves. And as long as that's done by December 31st through a motion of council, you can move the money to your reserve funds. And you can do it the other way too. You can move money from the reserve funds based on motions. So at the end of the year, you've got a surplus there of $1,559,000. And then we take at the end of last year, there was an accumulated surplus in the town of $24,728,855. So we add this year's surplus to that, and that gives you an accumulated surplus at the end of the year of $26,288,000. And so what that is, we'll look at that quickly here on your statement of financial position. So this is kind of the balance sheet, and you can see at the bottom that accumulated surplus, 26 million. So what that is if we look at the top section here in your financial assets, you can see at the end of the year, the town had cash of $730,000. And that was comprised of a couple of things. Just take you to the note. There it is. So 730,000, you had in your operating account, there was 215,000 there. Within your reserve fund, 385,000. Within your gas tax fund, so this would be money that the town has received for gas tax, just hasn't spent it yet. And then with part of the Ross Memorial Library, so there was about $10,000 in cash sitting in the Ross Memorial Library bank account at the end of the year. So that's your cash. Accounts receivable, this would be money that was due to the town at the end of the year that would have been, for the most part, collected after year end. So that was at 669,000. There's 88,000 due from the federal government. That would be HST rebates, which were received after year end. And there was 55,000 due in from the province of New Brunswick. And then the investments. So part of your reserve fund, you can see there's some investments there, 1.183 million. And there's a note here that just shows you what, and this would be the market value of those investments. So it just shows you that you've got fixed income, Canadian equity, some mutual funds, and then the 89,000, that's the difference between the market value of your investments and the what we call the book value.
Peter, if I may interject just quickly.
Absolutely, Chris.
It just, as probably council's aware too, we also have over $2 million, I forget the number now, 2.3, 2.4, in what's trust funds. Because the trust funds have a specific purpose, and Peter will probably touch on that towards the bottom, they aren't actually integrated into our financial statements except for as a note, meaning because we don't have the ability to do anything with them except for spend the income off of them. And so if you ever, we're going to have a presentation probably in the early fall from our wealth managers to talk about that, but that's why you'll see such a big difference, is that these reserve funds are our savings account that can be used for us, but the trust funds, as he's showing us there, are held outside of the town, so to speak, and so it's not integrated into our balance sheet essentially.
Yeah, so under public sector accounting, yeah, we're not allowed to Chris said, because you're a trustee of these funds to be used for specific purposes, so we don't include them in the actual body of the financial statements. So they're included here as a note. So the investments that we do, the portion of the investments that we do that are in your portfolio that we do include would be that portion that pertains just to the reserve funds, as Chris had mentioned. So you can see there that the total sort of what we call financial assets, you're at 2.727 million. And then as far as the town's liabilities go, your accounts payable, so this would just be expenditures that were due at the end of the year that you would have paid after year end. Those were at 819,000. And deferred revenue, what that is it's an accounting function, I guess, is that if the town receives money or funding for a specific purpose, and in a particular year when the money comes in, if that money was not spent on what it was meant for, in other words, it's going to be maybe in the next year you'll spend the funds, the money goes into what we call a deferred revenue account. So that money is not included on your statement of operations as income in a particular year. So if in 2021, now I think a good chunk of that, Chris, is the gas tax, correct?
Some of it, yeah.
Yeah, so there's that. So you may have already physically received the money. The town just, in some cases, you may get a couple of years worth of funding and then you spend it all in 1 year. And if that's the case, then we would then take that portion would be moved out of this account and put into your revenue account.
Yeah, for most cases, you're right, Peter. It's unspent grant money that we received and is still in the process of spending it between 1 year to the next.
Yeah, so we have to match that up sort of when you recognize the revenue and then when you're spending it. Long-term debt. So you can see there you're at 5,070,000. This year, there was about 1.4 million in debentures brought in. And I'll show you that. There's a note there, number 9. So you can see the new debentures here. And you can also note too, when you look at that, this is the interest rate over the term of the life of those debentures. So you start out at 0.9%. And then at the end of it, you'll be at 2.95%. So the interest rates are still fairly low on these borrowings. And then by what we mean by redeem during the year, this would be what the town paid down on its debt. So at the beginning of the year, you had long-term debentures of 4.1 million. There was 1.4 million added and 523,000 paid off. So at the end of the year, you're sitting at 5,070,000 in debentures. So that would be, so one of the things that we look at as part of the audit too is just what we call the debt service ratio. It's not on these statements, but what it is we look at your what the town spends on principal repayments and interest on its debt, and we look at that as a percentage of your total expenses. And again, we look at the various funds. So for the general fund, the debt service ratio was 5.8% this year, which is down from last year. Last year was 6.5, and that's healthy. The province sort of looks at, if you get up near 20% debt service ratio in your general fund, then that could indicate that the town's got too much debt. But at 5.8%, that's really good. That's pretty low. And in the utility fund, your debt service is 31%, and that's okay because your sort of the top limit on the water utility fund is 50%. And the utility is higher because generally your budgets are smaller, or your operations are smaller in the whole. And there's a lot of capital intensive work that has to go into your utility fund with wastewater treatment facilities and that sort of thing. So the utility tends to carry proportionately more debt than the general fund just because of the nature of the capital assets in it.
Mr. Logan, just on that note, generally, obviously, I know operating and utility are two different funds. They're independent. There's revenue, expenses in both, but it does allow for transfers for. I'll give an example, like fire services. I don't know if that's a question more for Mr. Spear or yourself, but do you know? I know you deal with other municipalities. Is there a standard that you normally see between that transfer between both those funds?
Like the water cost transfer?
Yeah, the water cost transfer. I think ours is pretty low at 25,000. There's no question about it. Where you can see with the debt ratio that the cost of producing water is going up higher and higher. And I just feel like with that transfer that we're not looking for the operating expenses to necessarily cover it, but in the same sense, I think we might be under indexed compared to other municipalities. Is there a benchmark standard that you've seen?
Yeah, there's I think in the if you look in the old municipal, when we were doing this the old way, the municipality, and I think it's still in there. I think they updated it a couple of years ago. There is a water transfer price kind of a formula.
Okay.
That or a guideline that you could look at. I could look up and see. I don't know it off the top of my head, but there is sort of like a formula there for water cost transfer.
It's up to 30. The maximum is 35% of your water budget. Not of your. You have to exclude the sewer part of it, but that includes operations and financing and some capital.
And Mr. Spear, I believe we were about. I might be wrong on that. About 25,000 is all we were doing.
Well, 75, which
75,
if we went up,
sorry, yeah.
which went up to the 30. If we went up to the 35%, we could actually do over $200,000 in additional water cost transfer.
Okay. So sorry to sidetrack it. It's just as we try to manage that ratio, to your point, any extra revenue that you can bring in can obviously help offset that. So it's something that this council should be aware of. And I think we should at budget time discuss that further, Mr. Spear.
I'd agree. Thank you.
And then these liabilities here, the last two, these would be, there's accrued sick leave, and these are, and the larger one is the retirement allowance. So there's a note there that talks about, number 10. Yeah, so the town provides a retirement allowance for its employees. And it's basically, the retirement pro, yeah, pay employee, when the employee reaches age 65, it's equal to 1 week's pay for each year of service. So in order to qualify for this benefit, the employee's age plus years of service must equal 75, or they reach 65 and have 10 years of service. And so what this liability recognizes is that there's a future obligation of the town to pay those retirement allowances out when somebody retires. And so every 3 years, there's an actuarial valuation that's done to calculate that liability. And obviously, when you have a long-term employee who does retire and there's a large payout or a payout of that, that would actually drop that liability down a little bit. So that is just recognized there as a future liability for the town. It's not all usually due all at once. It's due as people reach retirement age. So with that, if we add up those liabilities, your total liabilities here, you're at $6,556,000. So when we subtract that from your, what we call the financial assets up top, that shows a net debt of 3.8 million. Then you've got your, what we call the non-financial assets. So these non-financial assets are your capital, your what we call tangible capital assets. So you can see there, I'm going to take you out to a note that has a lot going on. So this is our tangible capital asset note here. I know it's small. And so across the top of that, these are just the various categories that we have for municipalities. And then your cost base would be the original cost to construct these assets. So at the beginning of the year, for example, land, 1.8 million. We've got a line there for additions. So during the current year, the town added $3.1 million worth of capital assets to its books. And so that's partly what the unconditional grants go towards, as well as the capital donations go to help pay for this 3.1 million. And then your long-term debt, and as well as you paid for almost $1 million out of your general operating fund as well this year. And then you can see the categories. There was 187,000, for example, spent on roads and streets, water and sewer. So there again, that's combined there, you're almost 700,000. And then vehicles, there was 343. And then a large chunk this year was the medical center under your building. So there was additions there of 1.7 million. And you'll also notice disposals. So when assets are sold or are fully amortized or are no longer in use, we record a disposal on the books. So there was $400,000 worth of assets removed from the books this year. The next column there is what we call amortization. So this is the expense that we recognize each year to recognize that the capital assets, the tangible capital assets of the town are another year older. And so their value has decreased. You can see there that number is 1,225,000. So that would be the amortization expense. So at the end of the year, what we call the net book value of your capital assets is 30,117,000. So that includes buildings, vehicles, machinery, streets, roads,
Ditch and ground.
Sidewalks. Yeah, it's got everything is included in that. So that's when you look at this, when we go back to the statement of operation, or sorry, the statement of financial position, when we say the town has an accumulated surplus of 26 million, well, really what it is, it's the equity that you have in those assets. So you've got net capital assets, tangible assets of $30 million. And your net debt is 3.8 million. And so the accumulated surplus in the town of 26,288,000 is really your streets, your roads, your buildings. So when you see surplus, it's not, you don't have $26 million sitting in a bank account somewhere. So that's always under the public sector accounting, the wording, this is standard wording. So we call it an accumulated surplus. And every town has one. You'd be in a case where you didn't if you were borrowing, again, you were leveraged so high that you had so much debt. But over time, the town does accumulate these assets. And as far as the amortization goes, there's there, this shows you how we amortize the various categories. So you can see there's a pretty big range. And these are all sort of under the recommendations or guidance, I guess, of the province. And there are like vehicles, for example, it can be 5 or 10 years, depending on the vehicle, it's all based on management's best estimate of how long that asset's going to survive. And so you can see like marine structures, that's the wharf, 20 to 40 years for that. Wastewater, 20 to 100 years. So it is a fairly wide range, and it's all done on straight line. So each year we recognize a piece of that amortization, which brings down the net book value of the assets. And I'm going to go out now, show you the reserve funds. So we talked about those. Talked about that. Yeah. So here's your note 18 shows the statement of reserves. So again, they're broken between your general operating. So this money can be used for day-to-day operations if you needed it. General capital reserve fund, there's 1.156 million sitting in there. And that money would be used for general capital. So that can only be used for general capital projects. And utility operating reserve was $5,400 there. Again, that would be for utility operations. And then in your utility capital, there's 217,000 in your utility capital. So that can be used for utility capital projects in the future. So at the end of the year, total reserves within the town are 1,487,000. So, and then the bottom section of that note shows you the activity within the reserve fund. So during the year, there was transfers in of 240,000, another transfer in of 85,000 into utility fund. And then there was some interest or investment income earned on your investments, 36,000. So that gets included in there as well. And then during the year, under your general capital reserve, there was 290,000 taken out to spend on capital projects in the current year. So overall, between the transfers in and your interest income, the reserves went up this year by $46,630. So that's the difference between the 1.440 there and the ending balance of 1.487. And those reserves are all managed by motions. So the province requires that transfers in and out all have to be done before December 31st. And they all have to be done via motion. So we do put part of the public sector accounting, we do include here a copy of those motions just so that the province is happy that the motions were all done in accordance. And note 19, that would just be the piece of the Ross Memorial Library. So as you can see there, it's not a huge entity, but we still are required to consolidate it with the town's records. And then note 21, we looked at that as well. So there's a lot to digest in those statements. They're 26 pages. And I know I kind of had to run through them, but does anybody have any questions on those, or just, I guess, any questions in general on the audit?
Council? You may have to, since I can't see you all, just if you have any questions, just put yourself off mute.
One thing I'll add quickly to, Peter, is that when we're talking about the assets, due to the nature of municipalities, you have to remember that some of our assets, like roads and pipes in the ground, have lives of 50, 60, 70 years. So in no way reflects the actual cost to replace them, which could be double or triple what's shown on here. Compared to, say, a normal business might have 5 to 10 years, most of their assets. Ours is so long-term that some of the assets we have in our records were built in the 50s and 60s still, and still being advertised at those rates. I only wish we could get construction rates what we did back then.
Well, there's no other questions. I just wanted to say thank you very much, Peter, for taking us through that. We do have a motion here in a moment just on it. I'm not sure if any questions will come out of the motion, but if you don't mind just staying on the line for just another moment, it's the first motion that we do have. So once again, thank you for that presentation.
Well, thank you, Mayor Henderson. And I also just wanted to thank Chris and Emily for getting the records in good shape for us. So when you're coming to do an audit, if the internal records are in good shape, then it makes our job a lot easier. So I just wanted to thank them.
Perfect. It's great to hear. And thank you. That's a good point. Obviously, I've had the opportunity to go through this 6 times now, and I just wanted to acknowledge that the findings are very consistent in the fact that our town staff does a wonderful job in setting us up for success, and we appreciate your contributions to that as well. At this time, we're going to skip off presentations and we're going to transition right into motions to try to get us back on time. Deputy Mayor Akaji, do you mind reading the motions?
No, I don't. Thank you, Mayor. The first one is from Finance Administration Committee, and it's the FA 210607. And it's June 16, 2021, 2020 audited financial statements. And the background is the audited 2020 financial statements were presented earlier this meeting by Peter Logan, CPA, CA of T. Saunders, Doyle and Company. The firm is issuing an unqualified, clean opinion that the statements present fairly the financial position for the town of for the town at the end of 2020. So therefore, our motion is move that council approves the 2020 audited financial statements as presented by our auditors, T. Saunders and Doyle and Company.
I have a seconder for that motion. I see Councillor Blanchard. Any more questions? I know we just got done the presentation, or any comments, anything before we call the question? Seeing none, all those in favor of the motion, please signify by saying aye.
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 Any opposed? Seeing none, that is carried. Thank you again, Mr. Logan, for joining us on the call. If you'd like to stick around to hear about the highway designated program or the compressor at the arena, by all means, feel free to. But thanks again for joining us.
All right. Well, thank you very much. I have to mow my lawn, so I gotta go. Thank you. Thank you very much.
If you want to continue, Deputy Mayor, we'll go to the next one.
Well, the next one is Public Works Committee, PW 210604. And again, this is June 15th, 2021. A 5-year municipal designated highway improvement motion. And the background is this: the province of New Brunswick, through the Department of Transportation and Infrastructure, is asking the town of St. Andrews to submit an updated 5-year plan for municipal designated highways improvements. The plan details a list of contributions. Please see the 5-year municipal plan, highway improvement plan for 2021-2026 attached to this report. The report must be completed and submitted by June 30th, 2021. And the motion is that council moves to approve the 5-year municipal designated highway improvement plan to be submitted to the Department of Transportation and Infrastructure, Province of New Brunswick, for June 30th, 2021.
Thank you very much, Deputy Mayor. Could I have a seconder? I see Councillor Heenan. All right, we had a chance to look at this last regular meeting, but is there anything that anyone would like to add at this time? We are in a time crunch with it being 9 days away, so we're kind of between a rock and a hard place right now. But with that being said, any questions? I see Councillor Gumichel.
Thank you, Worship. Just last time around, I remember not being happy that sidewalks and trails weren't eligible to be funded under this gas tax, and the reason being that the DTI does not consider sidewalks or trails critical to the asset's lifestyle. So they're fixing up roads with no sidewalks. And I think it could easily be argued that sidewalks along the side of the road might decrease the number of cars, which would actually increase the asset's lifestyle. So it's too bad that we don't have sidewalks coming into St. Andrews on Mowat and Bayview drives. I think if we should be asking our MLA to look at that into the future because both those roads should have sidewalks to encourage active transportation. Thank you, Your Worship.
Thank you very much, Councillor Michelle. Any other comments or questions? Seeing none, I'll call the question. All those in favor of the motion, please signify by saying aye.
Aye.
Any opposed? Seeing none, and that is carried. Next motion, Deputy Mayor.
Thank you, Mayor. Public Works Committee, RCS 210604, June 16th, 2021. Chiller replacement and compressor repair motion. And the background is at the June 7th, 2021 regular council meeting, staff presented a report on the need to replace the chiller and repair one of the compressor units at the W.C. O'Neill Arena. The unit is anticipated to take 10 to 12 weeks to be shipped and installed at the arena. We anticipate work to be completed before the end of September to be ready for the ice season in October. It is estimated for the total replacement and repair costs will be upwards of $100,000. Staff are finalizing quoted prices and will provide council with an update on the total early in the week of June 21st. So the motion is this, that council moves to approve the expenditure of up to $100,000 for the replacement of the chiller system and the repair to one of the compressor units of the W.C. O'Neill Arena.
Thank you very much, Deputy Mayor. Can I have a seconder for that one? I see Councillor Gumichel. Thank you, Councillor Gumichel. I know we did give staff consensus, but this is to formalize it. Is there any other questions or any comments? Obviously, we had a tour of the facilities and got to see the actual aging infrastructure that's in place in the W.C. O'Neill Arena complex. And if there's any more comments or questions, though, we'll take them at this time. I see Councillor Blanchard.
Just a quick comment, more than a question, just a comment. I think it's important to note that, as was previously pointed out, that $100,000 price tag that we're looking at, a large portion of that was made available through, I think, COVID return funds or whatever it was. I can't remember the exact title of that line item there, but I think it may be important to mention that for the public.
That's a good point. So it wasn't an annual budgeted amount that we're approving, but we did get an unexpected revenue that came in this year that could help offset this particular initiative. And I think the main thing about this too is for us, it was definitely a safety initiative is what really made us feel like we should do it now versus later, not to mention that if it ever didn't work, we could lose the ice for the entire winter. So those are both, that's a good prompt, Councillor Blanchard. Councillor Akji, I saw your hand as well.
I did. You just said what I was thinking because we had the great tour of all our facilities, and we were told that the chiller needs to be replaced. And looking at it, it definitely looks like it needs to be replaced. But the safety issue was the main concern that we thought of. And the 12 weeks without it, I mean, it's going to take us that long to get it and then to be installed. So I think this is something we have to do.
Perfect. Thank you, Deputy Mayor. All right. If there's nobody else, we'll call the question. Oh, go
Sorry,
ahead, Mr. Spear.
Thank you, Your Worship. I just wanted to mention quickly too that the Dunn Foundation was also made aware of it and have agreed to contribute towards the project as well. So between the two funds, it'll be completely covered by, I use the word loosely, pound money.
So unofficially a wash. So yes, that's a good point as well then. All right, we'll call the question. All those in favor of this motion, please signify by saying aye.
Aye.
And that is unanimous, so that has been carried. Thank you very much, Council. That does wrap up for this meeting, the motions. No new business. Question period. Did anything come in, Mr. Knopper, during the meeting at all?
No, Your Worship, I haven't received any feedback or emails from the public, so you can proceed.
Perfect. There is an opportunity for Council, Deputy Mayor's comments, but a reminder, we'll have that at the end of our next meeting as well. Was there anything specific to this agenda that you want to raise, or we'll do it at the end of the next one?
No, wait.
Okay.
We'll do it. Yes.
Perfect. And then no need to go to close session. So I'll look for a motion to adjourn.
So moved.
And I see a seconder through Councillor Blanchard. All those in favor?
Aye.
And we are adjourned for our 6 PM. We want to take just a quick washroom break and kick the other one off in about 5 minutes. Does that work for everybody?
Yes, please.